Let's start. Now I will show you how to calculate the RSI, and from the RSI it is easy to calculate how to calculate stochastic RSI. For the RSI we require the difference between yesterday's price. So for that is equal to current price less previous price. Then we got the changes. Then we got the changes. How the Nifty will be changed in the points. Now here we entering the formula of if the changes is negative, then upside movement is not considered, so it will be an zero. Same situation is here. When the changes is less than zero, then take the same number by converting into positive. So we can take a negative and changes otherwise zero. In this column, all downward momentum consider. Now, as per our EMA formula, we are taken the EMA of this upside period. Just started. From the last side, we are entering the same value. Then as per the EMA formula, that is current market price less previous market price into 2 divided by 1 plus period plus the previous exponential moving average, and copy paste this formula till today. This period is generally 14 considered. Now same situation, we are taken this EMA of this downside movement column. Now I just copy the formula of sideways of this step, only the number is changed. You can check it. I taken this number and the downside this number, and same copy paste till today. Now in the RSI, that is the relative strength, is equal to upward exponential moving average divided by the downward exponential moving average. Hence we got those numbers, but we want to convert it into the percentage, like 0 to 100. So we are using the other formula, that is 100 minus 100 divided by 1 plus that value that you want to convert into 100. Means you got all numbers into 0 to 100. Now our RSI is calculated. So I will make copy of this sheet because we require the same data for the stochastic RSI. In the stochastic RSI, we require same data till the RSI. Now we are adding two more columns in it. One is percentage K and another is percentage D. Now percentage K is calculated from this number, that is this RSI number. For it, now is equal to RSI minus minimum of this we are calculating for the 14. So we are taken the 14 plus 1 to calculating the EMA, that is minimum to 3 is to 17. Then we taken the 14 number. Then divide by the maximum of same period. Minus minimum of same period. Then we are getting this number. This is in percentage. So we are getting it in 48. Now same copy formula till the last. Now we are calculating the D line. D line is an simple, that is average, simple moving average of this K number for the specific period. We are taken here is an 5. and we calculated the D line. Now, this strategy you can use, and it is very easily if you understand the RSI. Now I will showing same on the chart. In this, you can check it whenever the K is the below the D, then the sell signal, and whenever the K line is above the D line, then the buy signal. Let's same on the chart. K line is the blue and D line is the red. Then you can check it whenever the K line below the red line, that is sell signal, and whenever K line, that is a blue line above the red line, that is an buy signal as per the stochastic RSI. I hope everyone will be understand the calculation and how to use the stochastic RSI to easily calculate the momentum and check whether a position is favorable in risk reward or not. Now, if any have query about stochastic RSI or calculation, please ask. Then we are going to the next indicator. Now we are starting the next indicator, that is Bollinger Band, and for which purpose it will be used. The Bollinger Bands represent the upper and lower side of the price, and it helps to calculate the volatility of the asset prices. Now just we are taken on the chart and show you till today's all indicators we learn how you can use it. The first and very important is the moving average that we require anytime whenever you need to take any position, that you always remember. Now entering here the moving average. As per the triple moving average, I entering here three averages. Now, if you are an investor and want to only purpose the investment, then the moving average is sufficient to taking the decision. But if you are a trader and want to trade for the positional or intraday purpose, then you need to do the all indicators. Minimum two from the momentum indicators and minimum two from the trading indicators. And if you are an option trader, then you require to check all data that we can showing on the next sections. Now, as still we are learn, I entering here all indicators. I am not entering here only the one indicators, that is PPO and the ADX. Generally that used in the options. The second is parabolic SAR. Now, suppose you want to take the position here. Here, all is show the buy signal from the trading indicator like parabolic SAR and moving averages. But As soon as you check, this show there is an overbought, so take the precautions. So as per this indicator, you can take the precautions and reduce the position size because it is an overbought. Same situation here. At this line, you can take position because moving average is also supported it, and the stochastic RSI is also tell or not overbought, so you can take buy position easily with the support of this parabolic SAR to take and buy positions. Now, whenever market goes down on yesterday, then you cannot take here sell position because as per the data, already market below the limit oversold and maybe short covering started. Moving average showing here sell position, but after this one candle, market immediately down. RSI is also below 30, so you can take precautions. Here moving average they show sell, but momentum indicator showing take precautions and avoid sell. As this type you can take the positions and check your sell. Also as per the parabolic SAR is here near about 11,300 and price is lower than 11,200. Means risk reward is also not favorable. Stop loss is very above from the current market price to take the sell position. So at this time sell position is not favorable. So you need to wait and watch while the risk reward will match and momentum may go up and support to the sell with the best risk reward. I hope your query is solved and you understand it. But now I have taken a daily chart and you want for the long term investment purpose. Then you need to consider generally because your position is only for the buying for the long term and with the best support. Then whenever above price you can continue with your amount, but whenever on the daily chart it will be the below moving averages, in this you can add it for the investment purpose moving average of 100 with the green line for the more confirmation purpose. Because your view only on the positive for the long term period, but as soon as all moving averages below the 100 moving average, then it will showing take care or take exit or hedge the position using the future, as same as you can check on the February end. Now you can check same as an earlier data also. for the short term period investors. You can check here. Whenever the on daily closing basis, all moving averages below the 100 moving averages, then near about 8 to 10% or 5 to 6% correction may be possible. This will be generally on the index minimum 1 to 2 times in the 1 year. Or same situation, you can take the exit from the stock on correct time, like many members having the Yes Bank. If they are using this type signal and exited on correct time, they maybe save their money by taken exit on correct time. For the investment purpose, generally chart should be used of the daily basis. If your capital is less than 5 lakhs, then always go with the buy on dips or divide into 12 months and amount invest each month, that is divided by 12. If your amount is greater than 5 to 6 lakhs and want to immediate invest, then you can invest it with the derivative stocks and you can hedge it. That I will explaining you up whenever we starting derivative sections. Then your risk will be zero due to having the derivatives to hedge your portfolio. I hope everyone will be understand for which purpose indicators will be used. Now, if you are interested, then as per in the last week, if you are interested to show your positions and your profit using these strategies as shown on WhatsApp, if anyone want to share it, then I will open his mic. EMA, you can use any EMA, but always remember, fastest moving averages should be the 2 times into the 2 times is equal to small slowest moving averages. Hence I taken 2050 as both has the round number. I can take as on 40. If you are taken 10, 20, 30, you can't get the best result. And generally for the portfolio management or medium to long term, always remember common numbers like 50, 100 and 200 because maximum populations use that number and that is very important support and resistance many times. So I hope everyone will be understand. Now we are taken other indicators on next Sunday. In that volatility, consider indicators that are related to volatility, and volatility is very important in the option trading. And at from the next Sunday, we are taken half in the volatility and options and half in the fundamental analysis. So what point should we remember in the fundamental analysis with the technical points before you buying any stocks or any portfolio? So thanks to all for joining. Have a great Sunday. We will meet on the next with volatility and again with the derivatives introduction, because volatility with derivatives is very nearest connection and you should know before entering option about the volatility.